Question today comes from a guy, we'll call him Frank. I have kids who are tipped employees and I'm trying to help them understand how it's going to work. Can you help me understand how this is going to affect their taxes this year? It's a big question, obviously, right? A lot of people are wondering if they're a tipped worker, how they can, or how that's going to affect their taxes. And if they're not tipped, maybe how they can turn some of that income into tips, right? A little different practice we're talking about there, but let's get into how exactly this will work for somebody who's in a tip job, typically a server or somebody like that, who's going to be receiving tips and needs to know how to deal with it. We're going to go right to the source on this one, folks. The old One Big Beautiful Bill Act, and we're going to the IRS website. We're going to read, let me point out a couple of the main things we need to be thinking about here. The two specific things in this new rule that we have is outlined clearly right here in these paragraphs. So this guy right here, maximum annual deduction is $25,000. Presumably that means for each individual. So if you are, husband and wife, theoretically you will both get a $25,000 deduction. But because it's a deduction, it's not a credit. What would that mean if you have $25,000? We'll look at an example as well, but if you have $25,000 in tip income, effectively $25,000 of that can be reduced to zero, effectively making all that income non-taxable. But again, we'll look at an example that shows kind of exactly how that works in a couple different situations. The other thing we want to look at mainly is this deduction phase out here. So that's something if you make a certain amount of money, if you are in a position where you're getting tips and you actually have higher income, whether it's a spouse that's contributing to the higher income or you have a substantial income and still have tip income, these phase outs happen where you don't get that deduction. So you're not going to be able to utilize that if you make adjusted gross income of $150,000 if you're single or $300,000 if you're joint filing. Now, the difference between those two is something we'll discuss down the line, the difference between single and married filing jointly. You'll see a lot of videos on how that works exactly. What we want to look at now is specifically how these calculations work with somebody who gets tips, right? So we're going to actually we're going back to our screen here. We're going to leave my dumb face out of it this time. We're going to look at this. So this is if you can see up here, the taxfoundation.org blog. They are showing you an example of essentially how this will get calculated. So on the left, you have somebody who doesn't have any tipped income, and on the right, you have somebody who does. And they're walking you through the math. And the big guy you want to be focused in on really is this above the line deduction for tax tips. So in this example, again, they're comparing somebody who's not making tips, but what would happen in the old environment is this $15K wouldn't exist. There wouldn't be any deduction. The tipped income would just go into your income pool and something that it's going to go into your taxable income pool eventually. In this example, Susan, our lovely waitress here, has this deduction in her profile here. She's made $15,000 in tip income. She gets to deduct all $15,000 of that, meaning only thing left for her to consider in terms of income is the $19,000 that she made with wages. And then so you're going to run that through the rest of the process. You get a standard deduction, which reads you to your taxable income. Effectively, she saved $1,700 in taxes this year because of the no tax on tips. But what I want to show you is something a little more involved and something a little more concrete or simple to understand in terms of what is exactly going on with the math here. The math behind the no tax on tips for a couple different situations, single, married, filing jointly specifically. Let's flip over to our handy dandy little Excel spreadsheet here. We all know we love Excel. Cue the music. Incredible introduction. Thanks, Excel video. We now are looking at the Excel spreadsheet. We're going to outline some of this math that we're looking at now. Let's get my face up there too so you can see me. No tax on tips. We're going to hide these two. We don't want to look at them right now. We'll get to those in a minute. No tax on tips when you're single. So again, similar to the example we just looked at, the wages in this case are going to be $15,000. And let's say your tips on the same profile at the server job is $20,000. The important thing to know, again, is the tips. It's important to know the difference because only the tips are going to be what you get to knock off your taxable income, essentially, or your adjusted gross income. The tips here, you can see the $20,000. You get to reduce that $20,000. That $15,000 is all that's going to go into that picture. Now, what I've set up here is a way that we can show the math differently. If we have $15,000, you're going to get that $15,000 deduction. You can see how that wages is all that shows. If we do $25,000, you're going to get a $25,000 deduction because, again, that's the limit, right? That's the highest amount you can deduct from your taxes. But let's say you made $30,000 in tips. If you did, what's going to happen is it starts to change a little bit. So now you got that $15,000. Previously, that's all that was ending up in this taxable income picture where it ran through the picture where you deduct your standard deduction and all that. In this case, you have $5,000 in tips that is going to get taxed because you've crossed over that threshold. So if you're flirting with those numbers, if you're somebody who's making more income and has a potential to start flirting with passing that threshold, you're going to want to loop that into your planning. You're going to want to make sure you understand how it's going to impact you because there is going to be some tax to worry about. And as this scales upwards, if you happen to reach higher tax brackets, this is going to become really important to know because tax will become substantial. You'll still get this benefit of the $25,000, but you don't want to end up in a spot where you think that whole thing's going to get deducted and you end up with a bunch of tax you didn't expect to pay. Now, let's look at a second example. We got married filing jointly. What this does, we still have that same $25K. So in this case, you're going to have a spouse who has their own job. They're going to be making a W-2 wage of some kind. That's what you can see here. The spouse salary, they're making $100,000. You have the same profile. Let's say it's the same. We're going to flip it back up top just so it's all consistent. That same $15,000 in wages, $20,000 in tips, you're going to get that same deduction. And essentially, so what we're going to be looking at is that you can see how these two items here are what ends up in this bucket here, as long as we stay under that $25,000. Yet if we go up to $25,000, or I'm sorry, I did that wrong. If we go up to $25,000, you'll see we get that $25,000 deduction, bam, still the same, $115,000. Once we cross it again, assuming you're the individual, you're the only individual, your spouse doesn't have any tips, we're just working with that $25,000 threshold, the same thing would happen. You're going to end up paying a little bit of tax on that $25,000. So similar things happening, but in this case, you're just working with more factors that have to be brought in because you and your spouse's income all get taxed together at the end of the day. They're going to go into the same pools, and you need to make sure that, again, those are balanced right. If you're flirting with any of these thresholds that we're going to be looking at, you need to make sure you understand how that works. Just make sure your picture is tied down nice and tight so you're not flirting with any of these things that could, throw things off for you and cause you a seizure at tax time. Now, let's look at one other scenario we have here. Let's say we're calling this, how could it go wrong? Now, it's not necessarily going wrong, but this is the case, again, where it's just a planning thing. You may expect to get a deduction you not end up getting if you are in a situation like this. What is this situation? Well, this is we'll call it a high earning spouse situation where you are still a server and your spouse is earning a bunch of money, who knows, doing rocket science or something. But the point being, if they have that salary that pushes you up into that limit where you're flirting with these thresholds, then what's going to happen? You're going to get those phase outs. If we go back to, we'll flip back to my face here. I'm going to go ahead and flip us over back to the information we were looking at earlier so we can get educated one more time. The deduction, let's flip back. The deduction here phases out at $150,000 to $300,000 for joint filers. Very important to remember, and that's the example we're looking at here. If we come back to our Excel, click this boy open, and we're looking at how could it go wrong. So, no tax on tips, married filing jointly. Your spouse salary of $300,000 is going to become a problem for this because, again, it pushes you over that married filing jointly $300,000 threshold for your adjusted gross income, meaning this whole thing's going to become moot, right? You don't get that deduction anymore. This will essentially become zero, and you're just going to get taxed on all your income at that point, most likely. Because, again, you're over that threshold. The AGI limit is coming into play for you. It's just something to plan on. It's not something to be worried about. Honestly, if you're in that situation, you're probably not even working anyway. It's not a situation where you're doing much work. Your spouse is probably providing the income for you. and your family, and maybe you're doing something else that can help the family out in a better way. But again, if you're in this dual income scenario, it's just something to consider and make sure you know where that's falling out. Now, it's going to be very valuable. We'll see how it affects the ultimate landscape of things, right? How this actually works out. It's great for people in that situation who are going to have their taxable income reduced, but at the same time, it creates larger macro conditions that we have to worry about, right? If you're in the no tax on tips situation, if you're in a spot where you can take advantage of that, this is something to be worried about. Think about these Excel examples that we've gone through, just so you can kind of suss out where you land. Are you single? Are you in a situation where you're married, filing jointly? And which situation ultimately are you in? Do a little research. We'll have more information on this coming down the line and more examples, because it's something that a lot of people will be interested in hearing about. Let me know if you have any questions. Send more questions in if you have them. Let's take a look at some things. Let's keep on learning. Goodbye, folks. We'll see you next time.